This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices fell about 2% on Monday to a three-week low as a higher-priced Brent contract expired. The U.S. dollar strengthened and traders took profits, concerned about forecasts of rising crude supplies and pressure on demand from high interest rates. On its first day as the front month, Brent futures for December delivery fell to $90.78 a barrel by 11:24 a.m. Eastern Daylight Saving Time, 15:24 GMT, down $1.42, or 1.5%, from Friday's close and also down about 4% from where the November future closed on Friday when it was still the front month. That was the Brent front month's biggest daily percentage decline since late May. U.S. West Texas Intermediate, WTI, crude fell $1.90, or 2.1%, to $88.89 per barrel.
U.S. crude oil and fuel inventories were expected to have fallen last week, a preliminary Reuters poll showed on Monday. 5 analysts polled by Reuters estimated on average that crude inventories fell by about 100,000 barrels in the week to September 29. The poll was conducted ahead of reports from the American Petroleum Institute Industry Group, due at 4:30 p.m. Eastern Daylight Saving Time, 20:30 GMT, on Tuesday, and the U.S. Energy Information Administration, the statistical arm of the U.S. Department of Energy, due at 11 a.m. Eastern Daylight Saving Time, 1500 GMT, on Wednesday.
Moving on to the top news in the energy sector.
Fuel prices consumers pay at the pump will be driven by a willingness to keep investing in fossil fuels, the UAE's energy minister said on Monday, as oil industry leaders reiterated the need for ongoing investment to smooth the energy transition. Speaking at the ADIPEC energy industry event in Abu Dhabi, Minister Suhail al-Mazrouei said the OPEC Plus producer group cares that the price is right for consumers, but right for the consumers for a very limited time only is short-sighted. More investment is needed in oil and gas for prices to be right at the pump, he added.
Seaborne diesel and gas oil exports from Russian ports fell 27% in September from a month earlier to about 2.76 million tons due to a major overhaul of refineries and a fuel export ban, data from traders and LSEG showed. Idle primary oil refining capacity for September stood at 4.657 million tons, up 45% from August, according to Reuters calculations. Last month, Russia temporarily banned exports of gasoline and diesel from September 21 to cope with a domestic shortage, but later lifted restrictions on bunker fuel and high-sulfur gas oil. Next, we have the top news in metal markets. The United States is optimistic it will conclude an agreement with the European Union to allow critical minerals mined or processed in Europe to qualify for U.S. clean vehicle tax breaks, a senior U.S. official said on Monday. The transatlantic partners are negotiating whether and how EU critical minerals, such as lithium and nickel, can qualify for green subsidies under the U.S. Inflation Reduction Act, which promotes products manufactured in North America. Jose Fernandez, Undersecretary for Economic Growth, Energy and the Environment at the State Department, told a briefing in Brussels that both sides were in intense negotiations.
Aluminium prices hit 5-month highs on Monday as the market factored in resilient demand in top consumer China, falling inventories in exchange warehouses and stronger activity in the country's manufacturing sector. However, a much stronger U.S. currency, which makes dollar-priced metals more expensive for holders of other currencies, pressured prices of industrial metals traded on the London Metal Exchange, LME. The sell-off, exacerbated by low liquidity due to a holiday in China, accelerated after the New York Open, pushing LME copper to a 4-month low at $8,048.05 a metric ton.
We will now look at the top news in the agricultural sector.
Strategie Grains has raised its estimate of this year's rapeseed harvest in the European Union to 19.5 million metric tons from 18.9 million a month ago, the consultancy said in an oilseed report. The increased estimate reflected better than expected harvests in Romania, Poland, the Baltic states and to a lesser extent Germany, Spain and Italy, it said. The revised figure for the 2023 EU crop was in line with last year's production. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.